It's 2 a.m. again. The candles flicker on the chart and in the room. Outside, the world sleeps. But inside, you're wide awake, staring at that chart like it owes you something. If you've ever found yourself refreshing CoinMarketCap every 5 minutes, or buying into a pump at 3 a.m. because this time it's different, then this story might feel familiar. Welcome back to the Midnight Trading. This is where the noise of the world fades, and we reflect not on what the market is doing, but on what it's doing to us. If you find value in these quiet talks, these long, slow exhalations of truth, go ahead and like the video, drop your thoughts in the comments, and subscribe. Put on your headphones, dim the lights, and let's begin. He wasn't new, but he acted like it. Had traded through 2 cycles before this one. Lost a little, made a little. But when the green candles returned in late March, something changed. They called it alt season. The charts lit up like fireworks, coins you'd never heard of going up 70%, 100%, 400% in days. Telegram was buzzing. Twitter was high off hopium. And he was right there in the middle of it, buying one breakout after another. Convinced that this time he was early. That this time he had figured it out. He told himself it was just momentum. But the truth was simpler. He was afraid to miss. The lie begins with a green candle. A simple one. A 5% pump on a coin someone mentioned in a group chat. You ignore it. Then it hits 12%. You open TradingView. You see the hourly chart. The volumes spike. By 20%, you're telling yourself you were looking at it days ago. Almost bought it. Should have pulled the trigger. You feel it rising in your chest, that blend of regret and adrenaline. By 30%, you hit the market buy, and just like that, you're in. Not because you believe in the project, not because your system told you to, but because you didn't want to be left behind. The chart didn't care. It stalled the next morning, then dipped 8%. No panic yet. You tell yourself it's just a healthy retracement. You zoom out, look at the 4H, looks bullish, but it slips more. Down 12%, then 15%. Now you're checking Twitter threads. Someone must have a reason for this drop. Some whale manipulation maybe. A market maker move. You don't know. But your conviction wasn't real. It was borrowed from the price action. And now that price is down, so is your belief. I've seen this story play out hundreds of times, and I've lived it too. People think you only lose money in bear markets. But bull markets are just as brutal, maybe more. Because they trick you into thinking you're a genius. They reward bad habits. They turn discipline into delay. Most traders don't blow up from one big red candle. They bleed out from chasing green ones. The guy I told you about, he rotated through 10 coins in a week. Each time the last one dipped, he jumped to the next runner. By the end of the month, he was down 38%. He didn't sell at a loss. He rotated at a loss again and again. Because in a bull market, the most dangerous feeling is this: something else is pumping without me. He used to trade with a system. Now he was trading with emotions. He stopped using stop losses. He started reading Reddit again. And YouTube thumbnails became his alpha. When he finally paused to look at his portfolio, it was a pile of small defeats dressed up as next time it'll run. He hadn't even realized what happened. He was busy. Busy chasing. Busy reacting. Busy lying to himself. The green candles had become his sirens, and he kept crashing into the rocks. Let me tell you something few traders want to hear. Most losses in crypto bull markets aren't caused by being wrong. They're caused by being too late and refusing to admit it. We tell ourselves it's about finding the next big winner. But what we're really doing is escaping stillness, because stillness means sitting with doubt, sitting with cash, sitting on the sidelines while others celebrate. And that's hard. There's a quote I come back to often, from Jesse Livermore, the infamous trader who made and lost fortunes. "It was never my thinking that made the big money for me. It was always my sitting." It sounds simple, but think about how often we don't sit. How often we convince ourselves we must act, especially when prices are going up, especially when everyone else seems to be winning. That's when the real test begins. That trader, he finally stopped one night around this time of night, actually. 2:17 a.m., he'd just rotated again, sold a 15% dip to chase a coin that had already doubled. Then he sat back, looked around his dark apartment. No music, no candles, just the glow of his monitor. He realized he hadn't won anything in weeks. He was just cycling risk, living inside the chart, and dying by it too. If this sounds like you, you're not alone. The market doesn't reward movement. It rewards good decisions, and good decisions often look boring, still, quiet. That's why the best traders seem to do less. They miss pumps, they skip hype, they let trades come to them, because they know something most don't. A green candle is just a moment. It doesn't mean you're late, it doesn't mean you missed it. It only means one thing: the game has started, but the game will wait for you. You don't have to chase it. He used to think he was good at this, not just lucky good. Back in 2021, when every altcoin had a heartbeat and everything he touched turned green, he'd wake up, check his phone, see a 20% gain, and smile like he'd figured out a secret no one else could crack. Momentum was his friend. It felt like the market had his back, like he and the chart were speaking the same language. But momentum doesn't have friends. It's not loyal. It's not personal. It just moves. And when it stops, it doesn't explain why. He remembers the day it shifted. Solana was running. AVAX was ripping. Even meme coins with no utility were going vertical. He was holding 5 different coins, up 3x on one, 5x on another. People on Twitter were posting screenshots. 2K day turned into 80K, 10Ks into a new car. The energy was thick, euphoric. But underneath that euphoria was noise. Every chart looked the same parabolic curves RSI in the cloud's volume spikes that made no sense. He ignored it, because it was working, until it didn't. Momentum traders rarely notice when the tide turns, because it doesn't scream, it whispers. The dips are small at first, 5%, then 8%. You tell yourself it's just profit-taking. Then it drops 12% in a single candle. Now you're not sure. You check Twitter. Still bullish. Buy the dip, they say. This is your last chance before liftoff. You buy more. You average down. You double your position. Because momentum must return, right? That's the illusion. Momentum makes you feel safe while you're winning. But it's a trap dressed in comfort. Because the more it works, the more you depend on it. You stop thinking. You start expecting. And that's when the market takes everything back. There's a story that old traders sometimes tell about the surfer who forgot the ocean. He started young, timid, cautious, learned to watch the waves to respect their rhythm. But one day, he caught a wave so perfect, it carried him all the way to shore, effortless, clean, beautiful. He came back the next day looking for that same wave. Didn't find it, but he waited. A week later, another came. Then another. He started believing he could summon them. Soon, he stopped watching the sea, stopped feeling the wind. He just paddled out and waited. And one day, the wave didn't lift him. It crushed him because he forgot that he was never in control. The wave chose him, not the other way around. Trading momentum in a bull market feels like surfing that perfect wave. But when the market turns and you've built your confidence on movement rather than method, you get caught, and you drown in your own overconfidence. Back in that cycle, he did what many of us do. He thought profits meant proof, that gains meant skill. But a rising market makes fools look brilliant, And when the tide goes out, it exposes everything. His stop losses were too loose. His sizing was erratic. He was overexposed to illiquid coins that had pumped on hype alone. It wasn't trading, it was drifting. And here's the strange part. Even when he realized things were slipping, he couldn't stop. Not because he didn't want to, but because he couldn't accept what that meant. To sell would be to admit the momentum was gone, that maybe it had never been his momentum in the first place. In the quiet, he finally admitted it. He wasn't trading with edge. He was trading with emotion, masquerading as confidence. Because momentum doesn't mean conviction, and speed doesn't mean direction. He was sprinting on a treadmill thinking he was moving forward, but he was just exhausting himself in place. Crypto markets move fast, and sometimes that speed can hypnotize you. You get addicted to volatility, to the chase, to the little dopamine hits of a successful breakout. But the best traders know you don't chase momentum. You ride it with conditions, rules, systems, boundaries, things that keep you grounded when the chart tries to seduce you. Here's a question to ask yourself during every bull run. If the chart didn't move for 3 days, would I still want this position? If the answer is no, you're probably not trading a thesis. You're trading a feeling. And feelings don't pay well. Momentum isn't the enemy, but the illusion that you own it, that it will obey your will, that's what kills traders in bull markets. Because when the trend breaks, the chart doesn't call you to warn you, it just leaves. And all you're left with is a bag. There's one last moment he remembers clearly from that cycle. He was in profit, significantly, more than he'd made in his job the entire year. And he held. Not because he had a target, not because the setup looked strong, but because he couldn't imagine it going back down. That's the illusion at work. It's not the chart lying to you. It's you lying to yourself with numbers, with patterns, with hope. The moment you believe momentum is yours to command, that's when the market takes it away. So here's a truth he learned too late. Momentum is a gift, but it's a short-term guest. Treat it like a visiting friend, not a lifelong partner. Because when it leaves, you better know who you are without it. It was late, always was. Most of them didn't speak much during the day. They worked desk jobs or lived with partners who didn't understand trading. But at night, the room came alive. A private Discord, 30 or so regulars, anonymous usernames, colored tags, one voice channel rarely used. Instead, they typed quick updates, chart screenshots, Dior replies to anyone who asked a basic question. But beneath the memes and emojis, something deeper was happening. A shared psychology. A collective story being written in real time, built not on facts, but on feelings. He joined the room sometime mid-cycle. Quiet at first, just watching, studying how the veterans spoke. Noticed the patterns. This one's gonna 10x. Strong fundamentals. Dev is active. Check the GitHub. Market caps still low room to grow. No one ever said I'm scared. I don't know what I'm doing. I'm underwater but can't sell. But he could feel it. In the tone between the lines. In the late-night silences after a bad red candle. There was one guy, Tesseract, posted every day. Long threads, deep dives on tokenomics, charts with Fibonacci levels, Elliott waves, psychological zones. People respected him, called him a conviction trader. But conviction is dangerous when it's built on ego. One night, the coin he'd been shilling, let's call it, Luna-like, dropped 42% in 12 hours. No warning, no news, just dropped. Tesseract didn't post for 2 days. Then came back, said he'd doubled down. Called it FUD. Said the weak hands are shaking out. And everyone nodded, typed rocket emojis. Said we got this. But something had shifted, and no one wanted to admit it. This is how groupthink works in bull markets. It's not loud, it's subtle. It hides behind a mask of community. But what it really is fear in disguise. No one wants to be the first to exit, because if you leave early and the coin pumps, you're the fool. If you stay and it crashes, at least you're not alone. The room started changing. Messages slowed. A few regulars went silent. One guy posted a goodbye note, said he lost too much, was stepping away. No one replied. Too awkward, too close to home. Because deep down, they all knew they were losing too. Not just money, but clarity, sanity, sleep. They weren't trading anymore. They were coping together. This isn't just a crypto problem. It's a human one. The urge to find safety in numbers, to turn uncertainty into certainty by consensus. If enough people believe the same lie, it starts to feel like truth, until it doesn't. He stayed in that room longer than he should have. Watched as the tone shifted from excitement to defensiveness. People started blaming exchanges, whales, algorithms, anything but themselves. Charts were no longer tools, they were battlefields. Every dip was a war. Every bounce was a prophecy. He posted less, read more, began to see the pattern for what it was, a collective descent into rationalization. One night, someone posted, "This is all just noise. If you zoom out, we're still bullish." And no one disagreed. Because zooming out was safer than logging out. It meant you didn't have to act, didn't have to decide, didn't have to face the possibility that maybe the run was over. Here's the truth. Trading rooms don't usually die in arguments. They die in silence. People stop showing up. Not because they've moved on, but because they can't face the mirror anymore. The room becomes haunted. Echoes of old conviction hanging in the air like smoke. That discord still exists, still has a few hundred members, but barely anyone posts. A meme here, a chart there. Mostly ghosts now, not people, just usernames floating in a place where hope used to live. When you trade inside a group, ask yourself, is this a place of truth or comfort? Are people sharing because they're thinking, or because they're scared? Are they seeking answers or seeking agreement? Because in markets, especially fast emotional ones like crypto, your ability to think independently is everything. And the more you rely on others to validate your decisions, the more danger you're in. The best traders, they don't isolate themselves, but they do protect their mental bandwidth. They don't let the crowd make their calls. They gather data, not dopamine. They know that group confidence is often inversely correlated with actual opportunity. When everyone's shouting up, only the smart ones start hedging. He left the Discord on a Tuesday. Didn't say goodbye, just closed the tab. Felt strange at first, like abandoning a team, but also like waking up from a long dream. He realized he had been trading other people's beliefs, not his own. And that's the most expensive trade you can ever make. So if you're in a group right now, ask yourself, would I still hold this coin if no one else talked about it? Would I still feel confident if the server went silent? Would I still be me without the echo chamber? The odd thing was, he was still up, even after the market cooled off, even after a few bad trades and shaky weeks. His portfolio was green, maybe not like before, but still healthy. He should have felt proud, satisfied, validated. Instead, he felt empty, and that scared him more than any loss ever had. There's a strange moment in every trader's journey, a point where the numbers are high, but the joy is gone. Not because you've lost money, but because you've lost why you're doing this in the first place. He remembers staring at his screen one night, 3 monitors' charts flickering in the dark, a fresh candle just printed green on a coin he bought hours ago. He should have been happy. Instead, his chest felt tight. His mind wouldn't slow down, and in that silence, he realized something important. Winning didn't feel good anymore. It felt like pressure. That's the trap no one warns you about, when profit becomes your prison. At first, gains are thrilling. They represent progress, freedom, skill. But then, something flips. The more you win, the more you fear losing. And the bigger the account gets, the harder it is to take a step back. He stopped sleeping properly. Every night was a cycle of checking prices, refreshing apps, whispering to himself, "Just let it hold a little longer." It wasn't greed, it was fear dressed as responsibility. He wasn't chasing wealth anymore. He was guarding it, clutching it like it might vanish if he blinked. There's a quote by Paul Tudor Jones, "Don't focus on making money. Focus on protecting what you have." But protection isn't the same as obsession. And he had crossed that line. He wasn't managing risk, he was managing anxiety. And that's no way to trade. He started noticing it in other places too. Conversations with friends half present. His girlfriend asking if he was even listening. His own reflection, eye bags tension, the flicker of unease. He used to trade so he could have time freedom. Now he couldn't go 2 hours without checking charts. The freedom had become a leash. There's a phenomenon in psychology called loss aversion. It means losses hurt twice as much as gains feel good. He felt that every day. A 10% win shrug, expected. A 4% loss spiral. Recheck entries, reanalyze charts, regret every decision. Even in a bull market where most coins were going up, he felt like he was losing because he wasn't making enough. It wasn't about wealth anymore. It was about chasing a version of himself he could never catch. And here's the irony, he had everything he once prayed for. The capital, the skills, the tools. But none of it mattered, because he never learned how to feel safe with success. No one teaches you that part. How to hold success without suffocating under it. How to breathe through it, not panic inside it. He remembers a night he almost rage-closed a perfectly good position. It had dipped slightly, not even 3%, but his brain screamed, "What if it crashes?" His hands hovered over the mouse, sweat on his palms. Then he paused, closed the chart, sat in silence, and realized it wasn't the trade that was broken. It was him. There's a sickness in this game, a quiet one. It looks like discipline, but it's really fear. Looks like ambition, but it's really avoidance. Traders start out wanting financial freedom, but somewhere along the way they start measuring themselves by pixels on a chart. Ticks, candles, unrealized P&L. He had become one of them, a prisoner to numbers that didn't care if he lived or slept or laughed. So he did something terrifying. He stopped, took a week off, closed his positions, logged out of Twitter, muted the alerts. At first it felt like withdrawal, like he was missing the world's biggest move. But after 3 days, he remembered how silence feels, how stillness tastes, how much of himself he had handed over to the idea of performance. When he came back, nothing had collapsed. The market was still there. The coins were still volatile. But he had changed. He started setting limits on screen time, on risk, on how many trades he took per week. He returned to journaling not just trades, but thoughts. Why did this entry feel emotional? Why did that loss hurt more than it should? He started tracking his mind as closely as he tracked his assets. And over time, the numbers mattered less than the process. Because when the process is honest, the outcome takes care of itself. Here's the truth. Winning is only good if it makes you wiser. But if winning just feeds your fear of losing it all, of not being enough, of slipping back to zero, then you're not trading. You're gambling with your peace. So if you're listening to this and you've been winning lately, check in with yourself. Is your success making you stronger or more scared? Do you feel in control or just lucky? Do you celebrate profits or quietly wait for the next disaster? Because sometimes the most dangerous time to be a trader is right after you've won. He doesn't remember the exact day things shifted, but he remembers the feeling of letting go, of trusting his system more than his feelings, of being okay with not catching every move. That's when trading stopped hurting and started healing. It was a Tuesday, gray sky, quiet house. He didn't expect much from the market that day. Bitcoin was consolidating. Ethereum was flat. Altcoins were behaving like bored children, no clear direction, just noise. He logged in anyway, habit mostly, opened his charts, brewed his coffee, stared at the screen waiting for something to happen. And something did. But not the kind of something you hope for. It started small. A minor alt. He'd been holding nothing huge, just a satellite position, suddenly dropped 8% in one candle. No news, no tweets, no trigger, just gone. Then another position bled, and another, and another. It wasn't a crash, no headlines, no liquidations flooding Twitter. It was something worse, a quiet, systematic unraveling. The kind of drawdown that doesn't scream but whispers. You were never in control. He froze. His plan said to cut at 5% loss, but 5% had already passed. Let's just wait for the bounce, his brain said. It didn't bounce. Now it was 11%. Now 14%. Now 17%. That's the part no one talks about. How slow losses can feel like quicksand. You're not panicking. Not really. You're hoping, which is far more dangerous. Hope is heavy. It tricks you into staying, into believing the chart owes you something. That because you studied, because you journaled, because you waited patiently. You deserve a bounce. But the market doesn't pay out based on effort. And on that Tuesday, it reminded him again how cruelly neutral it is. He closed the trade eventually. 21%. Sat there afterward in silence. Not angry. Not even sad. Just still. Then he opened his notebook. Wrote a single sentence. This is what discipline costs. And under it, this is what survival looks like. Because that's the truth about trading. Sometimes doing the right thing hurts. Sometimes the best trade you can make is to exit. Not because you're wrong, but because the market is louder than your thesis. And you can either fight it or respect it. He used to think the most painful part of trading was loss. But the real pain, it's detachment. Letting go of the outcome. Walking away from a position you loved. Admitting the market doesn't care about your conviction. That Tuesday taught him that. Not in a dramatic portfolio-obliterating way, but in the slow, suffocating way that burns a lesson into your bones. Afterward, he went for a walk, left his phone behind, watched the trees sway in a wind that didn't care about price action, saw a dog chase leaves like they were gold, and he remembered, the market can take your money. It can test your will. It can even shake your identity if you let it. But it can't touch your peace unless you give it permission. When he came back, he didn't open his charts right away. He sat by the window, let the coffee go cold, let the silence say what the candles couldn't, and he realized something simple. He was still here, still standing, still learning, still trading. That loss hadn't broken him. It had refined him, like sandpaper, rough but shaping. The real edge in trading isn't a strategy. It's how long you can stay in the game. And staying in the game means knowing when to fold, when to pause, when to protect your energy more than your ego. So when people ask him now, why do crypto traders lose money even in bull markets? He tells them the truth. Because they confuse momentum with meaning. They believe the market owes them something. They don't know when to stop. They think more risk equals more reward. They ride hope until it becomes delusion. And most of all, because they never learn how to lose well. Losing well is an art. It means cutting early, walking away clean, letting the next trade come when you're ready, not when the market demands it. It means trusting your plan more than your feelings. And it means learning again and again that survival is success. He closed his notebook that night with calm hands. The market would still be there tomorrow. So would the noise. So would the temptation. But so would he. Sharper, quieter, stronger. And that was enough. So here we are. The candles have stopped dancing. The charts have gone still. And maybe, just maybe, you've found something familiar in these moments. Maybe you've been that trader. Late at night, staring at a position too long, hoping the market gives back what it never promised. Or maybe you've felt the weight of winning, the invisible pressure to hold, to grow, to be enough. If you have, you're not alone. Every seasoned trader eventually faces the same ghosts. Greed, fear, regret. They don't care how experienced you are. They just wait, quietly, in the shadows between your entries and exits. But here's what separates the broken from the resilient. The willingness to stay human, to pause, to breathe, to lose with grace, and to win without arrogance. Because trading is less about chasing money and more about understanding yourself. And the better you know your fears, your habits, your tendencies, the longer you'll last in this game. So ask yourself, have I learned to lose well? Have I traded in silence lately? Have I looked beyond the candles to see the person holding the mouse? If not, maybe tonight is a good time to start. Have you ever felt like this character? What's your biggest obstacle in this journey? Share your thoughts below. I'd love to hear your story. And remember, success doesn't always shout. Sometimes it whispers. Put your phone down. Take a deep breath. You've already done more than you think. Success begins in silence.